but this time it will be about family offices, their services and their role in real estate investments. Family offices they're institutions that take care of property of really rich families. But lately, it's not only the very, very rich families, but the rich families as such. And so we start to have multi-family offices because they take care about the property of more families than just one. And that's what we are going to focus on right now, with the aim or with the focus on real estate as the investment sector. So let me welcome here Stefan Janke, Director and Head of Sales at Kronos Advisory, and also David Fogad, Strategic Partners Relations Manager at One Family Office. Gentlemen, welcome. Stefan, I start with you. You are not a provider of investment opportunities in real estate, but a multi-family office that has just been recognized as the best multi-family office in the DACH region.
That's right.
So let's start with the basics. What's a multi-family office?
First, good afternoon and very welcome here. It's a great honor for me and for Kronos to be here in Prague, especially after lunch, because I think it's very difficult to eat something and then to hear about topics, very interesting topics as multi-family
very
office.
Difficult ones as well.
Difficult one, yeah. So what do family office in general? Family offices provide information and they do a lot with the money of very rich people. Multi-family office say one person, one family is okay, but there are as well rich people from 1 million to 10 million or less, maybe 500,000, and they want to get treated maybe as well as these rich or very rich people. And so what we will do, we protect the property of these rich families. We optimize costs for them, and what we look at real good strategies for investment in Austria and abroad.
Thank you. That's the DACH region.
The DACH region, yeah.
And Czech Republic and One Family Office.
Well, in Czech Republic, and a good afternoon, everyone. Sorry to mention that. Well, basically, in Czech Republic, multi-family office represents basically the same kind of thing or structure as elsewhere in the world, which means multi-family offices are basically taking care of single-family offices, and they are providing them a wide variety of services, legal services, tax services, advisory, consulting, management consulting. Also, they can help them improve their businesses, how to operate the business, mergers and acquisitions consulting, and as well, of course, asset management, property management, and other services that are related. I would say that the difference between multi-family offices in Czech Republic and the rest of the world, first the one is that the term multi-family office or even family office is very new in Czech Republic. Just a couple of years ago, probably most of people wouldn't even heard of family offices, and only like the richest people in a republic had something that we could say filled the definition of family office. And now, since more and more families are getting wealthier, a lot of businessmen are selling their businesses that they established in the 90s, and now they have a lot of money, and they don't know what to do with that. And the multi-family office is here to help them, help them with spending money, of course, in the wise way. So the biggest difference is that it is something new. A lot of people don't know what multi-family offices do, what they provide, and it is also, so it's covered with a lot of misinformation, for example. And the second difference is that most Czech family offices are heavily focused on real estate, have way more than it is in abroad, which again has its historical roots. because in
it's
the
the conservativeness of our people in when it comes to investment as such.
Well, but it makes sense because most of these establishers of family offices is like 50 years and older, in their 50s, 60s, 70s. So it means they experienced the previous communist era. And in communist era, the only thing that you could actually own and that had some value was your house. So maybe also the focus on real estate comes from this perception that, the house made of bricks is the only thing that actually has some value and that I can own. And this is the same for all of ex-Eastern Bloc countries. When you look at the numbers, like rate of house ownership in the Czech Republic, it's like 77%. In Romania, it's 97%. It's the highest in the European Union. So only like 3 or 4% of Romanians live in rent. In Slovakia, it's 90% home ownership. So these numbers are extremely high. It will change. They will change, but this also affects the character of family offices and the structure of assets in family offices.
That's a difference to the
I think
western,
in Germany it's like
western part.
50-50, no?
Yeah,
In Germany it's
50-50. And the real estate thing just began beginning of 2000, and of the first crash in 2008, 2009 was not really good for family offices, because then they had to give the real estate part away and have only to invest in stock shares and bonds, but no real estate. It began with the low interest the last years, not now, but 4 or 5 years ago, and then the real estate thing came again, and now it's about 50-50. Yeah.
Okay, and what significance does it have for your clients now? Because when we take the categories of investment of family offices, usually it's shares, bonds,
a bit private equity.
And then we have the third class alternatives. And then in alternatives, we have real estate, which is probably in Czech family offices bigger than the two mentioned before. But how it is in DACH region?
In the DACH region, it's coming very. It will grow very strong because of low interest. What you have to do as a multifamily office, you have to look at the whole investment of one person or one family. And the one family wants to have 20% in real estate, one to have 50% in real estate. So it depends on individual goals from the family. And it's a bit complicated, because if you have a new customer who has already some investments with banks, there are real estate funds and real estate shares, and maybe they have these investments at the moment. And if you do some new investment with real estates, then you get some risky assets because it's done too much. So you have to check always what will be the whole investment of the family, and then you can do the right thing. But it's very important that you see the whole liquidity and the whole investment of the family.
Yeah, because then in the risky there is the private equity, venture capital,
venture
private debt, and so on.
And you always heard real estate, it's not risky. Yeah, but if you look at 2008 and
or the last year, probably even
last year, so it's a risky investment. Yeah, and if you have a lot of them, so it's not really good.
You've already spoken about how important, or like what significance does it have for your clients. So is it really that even the most rich people trust the real estate more than bonds that are very conservative, or?
Well, it depends strongly on the client, but I would say from our experience, because especially a lot of these people that establish family offices are the businessmen from the 90s, so they basically, for example, either privatized or started their business in the 90s and built it up and maybe sold it for like hundreds of millions of Czech crowns or maybe billions of Czech crowns. And a lot of these people never in their life invested in anything else than their own business, or of course, they bought a lot of property. Not only for their family members, but they also bought some apartments in new real estate developments or whole, rental buildings or something else. So they are actually not that experienced with investment at all. So they are very successful businessmen, but since they don't have any like real investment background and investment related education, they are pretty new in this. And also, for example, if someone sold their business, it is maybe the first time in their lives that they are really operating with a significant amount of money, which not only comes from the earnings from the business itself, but now it's like a huge amount of money, and they feel the pressure, especially because of inflation in the recent years. They feel a huge pressure to invest it in something that can generate an income that can provide not only for them, but also for the future generations. So they definitely feel under some pressure, and they are looking for opportunities how to provide their families and the future generations. And also they are looking at the real estate, but most of the cases is that these clients, when they come to us, they already have a lot of real estate, a lot. I mean like maybe tens or maybe hundreds of apartments across Czech Republic, or they own some office buildings or a lot of land. Usually they have a lot of land. Actually we are trying to look at the portfolio as a whole, and we are trying to persuade them to different kinds of asset classes, because they're already the real estate is very, very heavily presented in the portfolio.
So they need
as well.
to diversify a bit.
Definitely.
Already.
That's the next difference between Czech Republic and the DACH region. You start with real estate and we finish with the real estate, yeah? That's the difference, yeah.
Okay. By the way, you can see the QR code that you may also ask your questions. So you just raise your hand and I'll jump in with the microphone so that you may ask your questions. But when we see the situation now, is it a good time to invest in real estate? And probably, is it the right time for individual investment that is offered just above us at the International Real Estate Expo?
Well, that's a tough question, because for some family offices it could be an option, but usually I would advise my clients, especially when we are talking about like significant amounts of money, which means that they are able to buy more than just one apartment in Prague, stuff like that. I would advise them to also look at the investment funds, which are quite established in Czech Republic and provide a variety of asset classes that are represented.
We've spoken about them at the first panel discussion of the day.
Yes, actually, because direct investment means that they also need to provide a sophisticated property management that they often don't have. In a lot of cases, they were managing their properties by themselves, which is unsustainable, especially when they are coming to some older age and they want to, enjoy their life and not waste their time with tenants and leaking toilets and stuff like that. So yeah, it could be an option, but direct investment in real estate means that you also need to set up a structure to manage that investment. Whereas where you build a portfolio consisting of real estate investment funds, you can diversify not only in Czech Republic but also to different markets and different asset classes, which will protect you better from upcoming economic crisis or recession, because different asset classes in real estate are affected by the economic situations differently. So now we are in a very uncertain era, whereas nobody knows what will come next, whether or not, because Germany is in recession, Czech Republic basically is also in recession, but is it going to be a full-on financial crisis? Nobody knows. So what type of asset I'm supposed to buy to protect myself from the crisis? Well, that's a difficult question. I would say that residential real estate could be an answer to that, but it's not the only answer. There are also another ways how to handle it.
Thank you, Stefan. Your view?
He said a lot, yeah. No.
I will give you enough time. Don't worry.
No. It's okay because you said the right thing, and I just can repeat it because in Austria, Austria is a very very small country, and we can invest in real estate in Austria. But Austria is sometimes Austria is finished then, and you have to go to another countries, and then you go to the DACH region, like Germany. Maybe I have a lot of clients who invested in Czech Republic. But if you go to Spain or go to Dubai, as we see upstairs, the whole information, it's very risky, and of course you hear that's about 15, 20, 25% per anno, and you can invest about over some companies, but we always say to our clients, no risk, and hopefully some fun, but no risk, no fun. But it's very very difficult to invest then, because you have to look a long time to find the right property, and it's if you have a hype like Dubai and like Spain, it's very interesting for a lot of people to invest, because you're in, and you can talk about it to your friends and say, okay, it's fine, I have some flats in Dubai and Abu Dhabi. But we calmed down our clients and said, okay, be prepared that it's not always the fun, but it's very risky. So I think it's the better way for our clients in Austria to stay in the region they know.
So what types of real estate do you advise your clients on buying?
We advise both.
Nowadays, 2024. Situation we have.
Both. We advise Austrian investment funds because in Austria we have quite a few of them, and they do a good job and do a good income. And if they want to go directly in properties, then we discuss about Austria and the region around Austria. So it's like Hungary, it's like Poland, it's like Czech Republic. But Czech Republic has gone quite expensive at the moment, yeah. And the interests are high as well. So if it's if there is a loan necessary with that, it's maybe not really a good idea to buy a property at this moment.
So David, how about you? What types of real estate nowadays, or you may probably compare Czech Republic with Slovakia or other markets neighboring to Czech Republic?
Well, this is a great question. However, it strongly depends on the type of client and his expectations, his investment expectations, and also a period of time. Whether or not it's like short-term, long-term, mid-term, or whether it is, for example, like legacy investment, which means that it is really for the future generations. For like extremely long-term investment, I would say the best asset is land and agricultural land, because, well, it's it's an asset which is limited by nature, and there like never ever will be like more agricultural land in here. So it is like limited asset that will definitely grow in value over time, and maybe and actually, and if you look at the portfolio of these like aristocratic families and churches, what do they own? They own a lot of land, a lot of forests, and these are very, very old, and they will own them for like next hundreds of years. So if you are looking for something like that, land is great. If you are looking for something more exciting than land, well, I would say that still there are some opportunities in Czech Republic, and especially more in Slovakia than in Czech Republic, to invest in residential real estate, because even though the prices are high, they will be higher, And in the recent year, we experienced a slight price drop. So there is right now, I assume there is a window of opportunity on the market to buy the real estate with a little bit of discount and generate, generate an income in the upcoming years, because we are already seeing, that the prices are going up little by little. The interest rates are also going down, and it also depends on
Czech
whether.
Republic, yes.
In Czech Republic, because we started rising the rates sooner than in Europe, so we are now able to put them down, and so it could be a solution, but also office buildings could be interesting, because right now, especially in Prague, we have very low vacancy rate. About 7% of offices are vacant, which is very low. It will
even
be
less it is when you go to logistics segment.
Well, that's a good question. I'm not really expert on industrial real estate, but after the COVID, when the demand for industrial properties, and now it is slightly going down, which we can see it at the when we look at the investment funds that are focused on this specific kind of asset class. And investment funds focused on industrial and logistical real estate are not doing great right now. So maybe that answers your question, because obviously they are copying the market.
Good. How about when we go to residential more in detail? There is a huge trend, especially when it comes to talking, not yet building, but talking, is built to rent apartments. Is there an opportunity for investors?
He's the specialist.
Kind of. No, not really. But, build-to-rent development projects are really interesting because, there is more talk than actually doing it. But we are already experiencing first finished build-to-rent project in Prague and in Brno and in some other cities. And the build-to-rent properties are very good for family offices, because usually they come with a management. So you only act as a financial investor, and everything is operated by a professional company, and you are only generating the income. You can also buy the property as a whole, and these type of properties are built for maximizing income. Because before that, what we were seeing is that the investors were buying apartments in apartment buildings, but that the apartments were not meant to be rented. It was meant to be inhabited by the owners, and so usually they were in higher standards. They were pretty expensive, kind of inefficient to operate. So these built-to-rent concepts are pushing down the expenses and maximizing the profit from the square meter, which is better for the investor. So because this type of property that is not meant for a long-term living, for example, it is meant for short-term living for students or single people, young families and stuff like that. But they are very very small, like 20, 25, 30 square meters at maximum. They have shared amenities. So there is a laundry room. You don't even have your own washing machine in there, because it's really, really, really small apartment. So a lot of these services are shared, and it is optimizing the rental income.
Okay, now I know what you mean. In Austria, we got the same thing about 10 or 15 years ago. Sorry to say.
You are ahead of us, of course.
No, but it was really a great thing then, and because of tax issues, you had a lot of good things in your tax advice. The government in Austria saw that as that the tax income for the government would decrease, and so they made this to an end. So it's not really a good thing in Austria to do this kind of stuff
anymore. We got two questions from the audience as well. Are you looking for new investment opportunities? How can my investment company be added into your portfolio? What are the conditions to be added? Are you looking for new investment opportunities? Then there would be yes, probably. And what need to be done?
Well, yes, we are.
You're here in Czech, so.
Okay, so yeah, of course, we are always looking for new investment opportunities for either for us or for our clients, because we are also managing a couple of investment funds. And so, yes, the criteria differ. So it is based on what type of investment are you offering, whether we are talking about asset or about some share deals or investment fund, or what kind of investment it is. And based on that, the criteria varies. But for example, in some cases, we are only looking for investment opportunities that are regulated, which means, for example, only the funds or maybe bonds. For some clients that could be like more open-minded, we can also look for unregulated investment products, or direct participations in, for example, in some share deals, or as private equity, venture capital. Into startups. Also, we also have some clients that prefer to invest in something new and are more let's say more. Their risk assessment is different than, for example, for the older clients. So, well, it depends. It's the best answer I can get you.
Good answer. We have a special firm in Austria which we do cooperate, who invests in real estate investments. Regulated, unregulated, we have just to talk, because maybe you do not know what kind of investment we can offer, and maybe we just had to talk.
There is a connecting question. Where do you find opportunities to invest with your clients? Do you collaborate with banks, investment companies, or developers, for example?
We don't want to collaborate with banks because we optimize our clients' portfolio, and then we have to talk with banks about costs. So and we get our money from our clients and not from our banks. So we do not collaborate with banks, but we collaborate with other firms which provide real estate in Austria and in the DACH region. There are always opportunities, because they want to get money, they want to get investors, and in time of high interests, a lot of people want to manage their risks and want to get new investors. So collaboration with banks or insurance companies, no, but with other firms, yes.
Okay, banks, no.
Well, basically, we cooperate with not I wouldn't say anyone, but maybe with many different companies that can provide many different services related to the client's investment. We kind of cooperate with banks, especially when it comes to financing, because in some instances the investment is not made by 100% equity of the client. So yeah, the bank comes into play, and there is therefore some financial leverage that we can create. But usually it's more like financing partner, not an investment partner or co-investor. We are also looking for co-investors, because from time to time, for example, either our clients can invest together in something, or we are looking for someone to invest with, because then the risk is allocated between more subjects than just one. So we are looking for like many. The partnership could have many different faces, many different types. It depends, and it also depends on the structure of the family office, because we are speaking about family office, but family office could be many different things. It could be an investment fund, it could be a holding, it could be a privately held company, it could be a trust fund, it could be basically almost anything. And that also has some effect on the character of the investment, the possibilities there are. So because of course we are on a European financial market, so a lot of regulation is in place. So there is a certain way how you can handle even your own money, and the regulation is becoming stricter and stricter, and especially if you are investing abroad, which is becoming more and more difficult. Even if you are transferring money from the EU country to outside EU country, the bank could stop it, So and the money won't arrive. So even within the EU, it is very difficult. For example, we are right now we are trying to operate some of our funds in Slovakia, and even that is difficult. So you need to fill a lot of forms, and so yeah, it's complicated.
We love regulation here.
Yeah.
In
Oh
Europe.
yes.
I just want to add that regulations is a real strong problem with investing in all kinds of stuff. Yeah, not only with real estate, but if you want to invest somewhere in the EU or somewhere in Czech Republic, it's always a real problem to open an account here, yeah, because you have a lot of documents to manage and to provide a lot of information. So since 2000, last 24 years, it has become real strict regulations.
Yeah, the single market is not that single as one could imagine. We have some questions coming to how do you get new clients, for example, or how do you earn trust of your clients? What do they look for? So how do you get new clients and how do you gain or earn their trust?
Yeah, that's a good question. Mainly with clients who are satisfied with our products and our maintenance. We do not do any advertising.
So it's recommendation.
Recommendation.
Word of
Yeah.
mouth.
Thank you. Thank you. Word in English. Yeah. My English is not so good, but I try. So yeah, recommendation. About 3/4 of our clients, new clients, are coming from recommendation. Maybe the banks. We work together. They tell their clients if they want a family office, they can come to us. That's a recommendation as well, but not a recommendation from a client who is satisfied, but from a bank which works with us together. And advertising, no, not yet. We just try to do something in some social media, maybe in this time, because social media is especially for the younger generation, very interesting point of sale. So these are the three main types. We come to new clients. Trust. Yeah, if you do a long-term commitment with our clients, a long-term investment with our clients, and they get the return they want, and especially the information they need. So I think they get the trust, and then they will stay for whole life, and maybe the family will join us as well. So because just this generation change now from the 60, 70-year-old people to the young generation. A very important thing at the moment. So we try to get them all together, the whole family, and protect them.
Thank you. And how about one family office?
We are in some kind of a different situation because one family office is pretty new. We started or we opened it to, let's say, public only this year. However, one family office is the extension of business that was made by Havel and Partners, the biggest law office, legal office in Czech Republic and Slovakia. So most of our clients come from our legal clients that we already we were helping them with all of their legal issues, tax issues.
So there is the trust
M&A.
already.
Of course, yeah. So we are the idea of one family office is built upon 25 years of legal services provided to our clients. Also, we cooperate with a lot of business partners that act as our business partners, consultants, and different type of providers. And of course, they can recommend us their clients or vice versa. And since we are a new project, we started kind of a PR campaign. So you could have read about us in Forbes and basically everywhere else. So a lot of people are coming directly, and based on what they actually want, because you can say that multifamily office, but multifamily office is more like a shop that you can get a lot of items from. So it depends what do you want, because a lot of these clients, they already have a lot of issues settled. They already, for example, have some property management in place, some asset management in place. So we only help them with like certain issues regarding to their properties or their businesses. So it depends. Yeah.
I can see the track there. There was the legal, Havel and Partners. Then they find out that the transfer of property goes from a man or male to female, and that there is a huge potential to offer them a help, a hand.
Yes.
So then the one family office was launched.
Yes. We have done actually a research specifically on this topic. It calls Next Woman, when we specifically made a research about how much money will be transferred from like this first generation of business owners to the next generation, and we realized that most of it will come to women's hands. So the next generation of these business owners will be mostly women, and they will be very rich, extremely rich. So yes.
What is the minimum amount of wealth of family you advise?
It depends. It's not really a minimum. We start to have them invested with us about €1 million. But if they have less or are young and they want to improve the whole amount, so we will start about €500,000. So it depends on each client. You cannot say okay, you have 900,000. No. It would be not really operating. So we start with between 500,000 and 1 million. I think that's the best thing.
Euros.
Yeah. Well, basically it's the same for us. So we also start around 1 million euros, or it could be even less, because of course we provide many services that we will provide to basically anyone who pays for them, but it doesn't make sense, when the amount of
the return is too less than. Yeah.
Yes, exactly. And when it comes to investment, I would say that more than 1 million euros is required to even for us to be able to create a diversified portfolio or some kind of asset structure. Because it's not that much money to diversify.
And the strategy for the 1 million. Yeah.
Back to real estate. I think we've probably answered those, but why is the percentage of portfolio held in real estate, 50% mentioned, so much higher for family offices than for institutional investors? Can we compare? Do we have the numbers?
I read some information about institutional investors in the US. What they do is they invest 90% in private equity and this kind of stuff. I think you have to compare different countries, different institutional investors. I didn't hear about that institutional investors invest less.
There is less, yeah.
Less
in real estate.
Do you think? What do you think?
Well, I would say I know only about Czech Republic, and I would say that the amount of money invested by institutional investors is on the rise, but it is rising for a very, very, very low base in Czech Republic. So when you look at the real estate market, like I would say that more than 90% of real estate is owned by private individuals. So that's the there is like when we are talking about apartments, there is around 230,000 apartments that are for rent in Czech Republic, and these apartments are owned by 70,000 owners. So 230,000 rental apartments owned by 70,000 owners. So yeah, there is that. The biggest institutional owner of residential real estate is Heimstaden. They have like 45,000 units, and that's it. But it's like nothing, in total in Czech Republic you have like
right?
4 million apartments or something like that.
Well,
So
there is a question that could be connected with that. Are vacational rentals less risky because standard residential has strong legal protections for tenants, even if they don't pay their rent? That is the case in Czech Republic. There is really, really high protection of tenants.
Yeah. You mean short-term like Airbnb?
Probably. I would say a vacation rental is like the short-term.
That's definitely riskier than long-term. Like everything short-term is riskier than long-term, like by most of the things. Because especially we have seen it, this is amazing that a lot of people forget about COVID. It was only like, not like 2 years ago, and 2 years ago, like all these like short-term providers like went bankrupt. So yeah, and now 2 years forward, and now we are talking again about the same thing. The friend of mine was operating 200 units. He went bankrupt within 2 months. So because he had to pay rent, because most of these apartments were long-term rented by him to short-term rented to someone else. So he went bankrupt within 2 or 3 months. So I wouldn't say it is safer. Definitely not, because it is also under heavy regulation that is based on a specific cities, specific magistrates. Every like city council and city district can have their own rules regarding short-term leases. So it is very there is a lot of political risk involved. There is a taxation risk involved because these things will definitely be heavily taxed in the future. I wouldn't say it is less riskier because when in one apartment you have like 20 different people a month, just imagine how much damage they can do in the long term. But I agree that we have a really strong protection of the tenant, but in Austria they have even a stronger protection of the tenant. Actually, in Czech Republic we have one of the let's say less strict policies within the EU. So I wouldn't say it is that bad. It could be way worse.
We are nearly, we have a last minute. There was a question about the differences between new generation of people and the people from the 90s in the way they invest, but I think we've touched upon that already. So, what basic requirements are important for you to be able to successfully invest in real estate in the long term? Both. Stefan.
Can you repeat the question?
What basic requirements are important for you to be able to successfully
Basic requirements. You have to have the knowledge about investing in real estate first, because otherwise you need a good partner like us. But you should have some basic information about investing in real estate. You have to be, it should be of course a long-term investment, not a short-term investment like Airbnb. and it should be only one part of the whole investment you do, because you need to have a lot of different investments like shares, like private equity, like real estate. So these three things would be the basic requirements for me.
Thank you. And for David?
Well, when you are talking about direct investment in the asset, not via investment fund, I would say, above everything that Stefan said, that you should definitely look at the quality of the specific real estate. Therefore, for the long-term investment, I would say that the new real estate development would be more suitable, because the building will last longer, simply. So, and you don't want to, renovate it every like 10 years. So you want to have as less work associated with it as possible, and also so the quality, location, of course, because there are locations that are timeless, you could say. So still, yeah, Prague is expensive, but it will be expensive forever. It will be expensive. So having something in Prague or in Vienna is not a bad thing in long term. Definitely, your grandchildren will be very thankful for such a heritage.
You have to invest more at the beginning.
Definitely. So for the long-term investors, I would say location, quality, and that's basically it. Yeah.
Thank you. Thank you to Stefan Janke from Kronos Advisory and David Fogad from One Family Office. And thank you for your questions. Thanks, guys.
Thank you very much.
Thank you.